Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome back to the channel. If you're new to the channel or not yet subscribed, consider subscribing to the channel where I'm going to show you how I compound the interest on my savings that I have in the stock market every week. And at the end of the month, I put that interest into my checking account. So if you want to learn about compounding interest on your savings account, subscribe to the channel and also hit the notification button so you can see when I post a video every week. So today we're going to talk about what happened at the close of the market on Friday. I had a Blackberry $2.50 put, and when the market closed on Friday, let's take a look at what happened with Blackberry, okay? So at the close of the market, Blackberry was trading at, as you can see here, $2.48. Okay, that's the price that Blackberry was at when the market closed on Friday, $2.48. So what happened? Well, I was assigned 100 shares of Blackberry, as you can see, okay? So I currently have 100 shares of Blackberry stock right here, 8% of my portfolio. I'm starting to diversify my portfolio, right, which is a good thing. And as you can see here from my total returns, at the close of the market, even after hours, Blackberry stayed at $2.50. Okay, so I'm currently up 2 cents total return on my Blackberry shares. As you can see here, what is my average cost? My average cost is $2.50. All right, so I'm up 2 cents, ladies and gentlemen, and I already made a profit of $28 on my investment, which I collected up front. Let's see that. Let's take a look at my history here. When I sold that put, I sold it for $28. Sold Blackberry $2.50 put, expiring June 28th, right? And I already made $28. So I collected my profit up front. I'm up $28 on my 100 shares of Blackberry, okay? But it doesn't say that here, right? On my total returns. It doesn't say that I'm up $28, okay? Because this is passive income. This is not a capital gain that I'm making, because I did actually pay $250 for these 100 shares. But I already made a profit of $28. I hope you're following along here. Now, I'm going to look at selling a covered call to complete the wheel next week. All right. I want to sell my shares for a profit. So I'm going to take a look at the $3 call. So let's take a look at that Blackberry options. And we're going to look at selling a call. All right. I have 100 shares. It's trading at $2.50. That's what I bought it for. I'm going to take a look at the July 19th expiration date, because for some reason this one is giving good premiums here. So if I take a look at the $3 call here expiring July 19th, I can see that I could sell it for 5 cents. 5 cents times 100 shares is $5, right? So this is what I would be selling them, or this is what I would be getting in passive income if I were to sell this covered call. All right. So as we can see here, my interest is already compounding. Okay, let's take a look at this order here. It says you are agreeing to sell 100 shares of Blackberry at $3 on or before July 19th. If you aren't asked to sell Blackberry by then, you'll keep your collateral and the full $5 credit. You are also paying regulatory fees of $3 per contract. All right. So I'm going to submit this order on Monday, July 1st, which is tomorrow, right? But I'm going to hold off on selling this contract for right now, and I'm going to let you know why later on in the video. But as you can see here, my interest is already compounding, right? I sold a put last week, or June 20th, for $28. And if I do end up selling this covered call for $5, then I'm already making $33 on my $250 investment. So that gives me a total interest of 13%, 13.2%, right, to be exact. That's the amount of total interest that I've made on my $250 in less than a month. Okay, ladies and gentlemen. So that's how my interest is compounded. Now, if I'm able to sell for capital gains, right? Because as you can see here, I bought it for 250 and I'm trying to sell them for 300. So that is going to add another $50. So how much interest would that be that I'm compounding if I was able to make a capital gains also of $50 on my $250 investment? Well, that would add up to 33.2% interest. So my interest would be compounding by a lot at that point if I was able to complete the wheel and sell my 100 shares of Blackberry for a profit, right? So that is how I'm compounding my interest. That is how I'm able to make passive income using the wheel strategy with Blackberry, okay? But let's go back. I'm not gonna submit this order just yet. Let's go back to my investing and see what's going on here. Bear with me for a moment here. Okay, so we talked about this Blackberry put already, and what we're trying to do next week is sell a covered call. All right. Now, as we can see here, ladies and gentlemen, no matter if the stock goes up or down, I can take advantage of this situation. If it goes down, what's gonna happen? Well, if the stock goes down, I'm gonna attempt to sell a put, a cash secured put. Why would I do that? Well, because when the stock goes down, right, puts go up in value. So I'll be able to make more money for my investment if I'm selling a put when the stock goes down. Okay. So I can take advantage of that situation. Now, if it goes up, well, in that situation, my covered call will most likely get exercised and I'll be able to make the most return on my investment. All right. So either way, whether the market goes up or down, whether this stock goes up or down, I'm going to take advantage of the situation. All right. Selling a put when it goes down and, making a profit if the stock goes up and my covered calls get exercised. So this is a great strategy to use if you don't have a lot of time on your hands and you're busy all day and you're not going to be able to look at the stock market all day. This is a great way to make passive income, ladies and gentlemen. All right, so what's on the agenda for next week? Well, miners are going to start putting up their June operations report, right? That's right. Miners are going to start putting up their June operations report, and Bitfarms is usually the first to put out their operations report. Now, the stock could go up if they get even close to operating at 12 exahash per second, right? It's not to mention that July is also historically a good month for the stock market. Now, there was some more news that came out on Bitfarms website that came out after I posted my last video. So we're going to discuss that at the end of this video. But first, I wanted to bring up a new stock I'm going to try to swing. And this stock, or not swing, rather, I'm going to try and use the wheel strategy with this new stock. This stock is Sirius XM. So let's take a look at that stock. The ticker symbol for this stock is SIRI, SIRI. So let's go ahead and take a look at this stock. My Siri just came up, but yeah. So now this is a dividend paying stock, ladies and gentlemen, as we can see over here, right? This stock does pay a dividend. Let me just show you really quick so that you can see that they do pay a dividend on this stock. Let's see what I'm looking at. The market cap is $10.9 billion and the dividend yield is 3.67%, right? So this stock does pay out a dividend. So we want to be careful when choosing which puts and calls to sell with this stock. We want to consider how much do they pay per share. Now, I already looked into this stock, and I found out that they are giving out between 2 and 3 cents per share as a dividend each quarter. So that's close to $3 a quarter for 100 shares. So we want to own, since we want to own the shares, so we'll sell a call expiring, or rather, we're going to sell a put that's going to be expiring soon. All right. Now, when we sell calls on those 100 shares, if I do end up owning those 100 shares, they have to be for a profit of more than the dividend payout each quarter, per quarter. So that's more than $3. I have to be making sure that I'm making more than $3. Okay. So let's take a look at what the analysts are saying about this stock. All right, let's go ahead and review this stock. What is Sirius XM? first of all, let's see what it's about. It says Sirius XM Holdings Incorporated engages in the provision of audio entertainment. It operates through Sirius XM and Pandora and off-platform segments. Okay, so they do own Pandora. The company was founded on May 17th, 1990, and is headquartered in New York, New York. The listed name for Siri is Sirius XM Holdings Incorporated Common Stock. All right. So the CEO is Jennifer Witz, and they have about 5,600 employees, headquartered in New York, New York. Founded 1990. All right. So let's find out what the analysts are saying about this stock. What the bulls say. They say, unlike streaming-based competitors, SiriusXM enjoys cost certainty on the royalty fee front, thanks to the passage of the Music Modernization Act. Pandora has stabilized its losses on the ad-supported side and should be able to substantially increase its advertising rates over the next few years. SiriusXM's satellite radio service and 360L platform have in-car technological advantages over streaming services that the rollout of 5G will not offset. So most vehicles in the United States do have SiriusXM in their cars, although they may not be functioning, but they do have it in their cars. If you want to add SiriusXM to your car, it should be available there. Let's see what the bears say. Streaming services could overtake satellite radio in popularity, causing a spike in churn and a lower conversion rate for SiriusXM. Pandora could be a long-term drag on returns and inhibit a path to profitability. Pandora is well behind market leaders, Spotify and Apple Music, and music streaming may be a winner-take-all market. So as we can see here, SiriusXM is in competition with Spotify and Apple Music. So they have some stiff competition there. But analysts do give it a 5-star rating. Let's see why. Okay. Let's take a look at this report here. And make sure I'm not missing anything here. Okay, let's read the full report. All right. Let's see here. I'm not sure this is what I wanted to take a look at, but yeah, let's skip this. I'm sorry about this, ladies and gentlemen. We're not gonna be able to look at the report, but I will let you know. Let me just go ahead on my app here on my phone, and I'll let you know the full report. It's easy to look at it on my phone here. So I'm gonna go to my app on my phone, and I'm gonna take a look at Siri stock, and I'm gonna read the full report as it comes out right here on my phone. All right. So here we can see investment in technology and content should support the SiriusXM subscriber base. Let's take a look at the thesis here. It says SiriusXM Holdings consists of two businesses, SiriusXM and Pandora. SiriusXM transmits music, talk shows, sports, and news via its satellite radio network, primarily to consumers who pays a subscription fee, often tied to a vehicle. Its radios come pre-installed on a wide range of cars and trucks in the US. Most of the stations on the SiriusXM network are proprietary, differentiating the service from streaming music and terrestrial radio. Most new cars with SiriusXM radios come with a 3 to 12-month trial period for the service. The conversion to self-pay after the trial is 37%, which represents the majority of new paid subscriptions. These customers have a monthly churn of 1.6%, implying a customer life of around 5 years. SiriusXM shares some of the revenue from self-pay customers with the automakers in the form of loyalty payments. Over the next 5 years, we expect that the satellite service will continue to expand, albeit slowly. By converting enough new and used car owners to self-pay to offset churn losses and by discounting the prices of a subscription to retain customers. Pandora, acquired in February 2019, is a streaming music platform that offers an ad-supported radio option and a paid on-demand service. Pandora still generates most of its revenue via advertising to consumers of its radio service who listened to over 10.5 billion hours in 2023. The paid on-demand service only had 6 million paid subscribers in the US at the end of 2023, representing 4.5% of the estimated 133 million paid music service subscribers in the country. All right. Pandora moved into podcasting to differentiate its offering, but larger competitors like Spotify have already added podcasts to their services. As a result, the space has become increasingly crowded, and we don't expect the move to generate significant growth or returns. We project that while Pandora will slowly expand its subscriber base over the next 5 years, The segment will continue to lose money as royalty payments will remain a drag on operating income. But what do they say about the fair value? Pay attention here. We're reducing our fair value estimate to $5 from $7.50 on lower growth assumption. Our fair value estimate implies a 2024 price earnings multiple of 15, an enterprise value adjusted EBITDA multiple of 10, and a 12% free cash flow yield based on our estimates. We forecast total revenue to increase at an average annual rate of less than 1% from 2024 through 2028. All right, ladies and gentlemen. So the fair value for Siri common stock is looking to be at $5. What is it trading at right now? You can see here $2.84. So it has upside, right? So that's why we're going to start using the wheel strategy with this company. Let's take a look at what it says about the economic moat. We assign SiriusXM a narrow moat rating based on cost advantage for its satellite radio service, with some benefit from intangible assets and elements of efficient scale. SiriusXM Holdings now consists of two companies, SiriusXM and Pandora. SiriusXM transmits music, talk shows, sports, and news via its two satellite radio networks, primarily to consumers and vehicles who pay a subscription fee. The firm's radio come pre-installed on a wide range of light vehicles in the US and Canada. SiriusXM also offers a more comprehensive streaming version of its service that can be accessed on mobile devices and computers. SiriusXM ended 2023 with about 34 million self-pay customers. The firm acquired Pandora Media in February 2019. Pandora is a streaming music platform that offers a radio option and a paid on-demand service. So we already talked about that, right? One of the largest expense categories for SiriusXM, Pandora, and any of their streaming competitors in the US is content cost, especially music royalties. In the US, anyone who rebroadcasts any copyrighted music must pay a royalty to the recording artist, songwriter, publishing house, and other copyright holders due to specific laws. The people who are compensated depends on the distribution platform and the copyright law. For on-demand streaming platforms like Pandora, Spotify, and YouTube, the services pay a per-stream royalty based on their negotiations with record labels and publishers. As expected, larger players on either side of the table will pay less or receive more dependent on the size of their audience and the size and importance of the libraries. So we see here how they get royalties paid on them, right? So it does have a fairly, let's see here, when it comes to the economic moat, it has a little bit of a moat, okay? So Siri is not a bad company to use the wheel strategy with. Let's take a look at what they say about their stewardship. We assign SiriusXM an exemplary capital allocation ratio, exemplary, driven primarily by the likelihood that the company adds value through its shareholder distribution policies while also considering the shape of its balance sheet and investments. SiriusXM's balance sheet is sound, as the company had $216 million of cash and equivalents and a $9.2 billion of debt at the end of 2023. This places the net debt adjusted EBITDA ratio at 3.3 times, a reasonable level within its target range of low threes and typical for a firm affiliated with Liberty Media and John Malone. The firm repurchased over $2.4 billion in shares from 2021 to 2023, with a low of $274 million bought back in 2023 and a high of $1.5 billion in 2021, after which management slowed buybacks to maintain the leverage ratio. Over the next few years, we expect lower levels of buybacks as the firm invests in research and development and higher capital expenditures to support the business. We think that management has done a reasonable job of purchasing shares at fair to undervalued prices, with some exceptions. The firm has spent only around $553 million on acquisitions since 2017, excluding the all-stock Pandora transaction. SiriusXM repurchased all of the shares it issued as part of the Pandora acquisition within a year of announcing the deal. The firm pays a modest dividend that yielded about 2% for the most of 2023. The board also issued a special dividend of 25 cents per share in February 2022 due to 2021 outperformance. We view this dividend as an outlier and do not project that another special dividend will be declared in the near future. The firm's most significant recent transaction was the all-stock acquisition of Pandora in February 2019. While we understand the rationale for diversifying into streaming, we still don't see a path for Pandora to accelerate its paid subscriber growth at the expense of larger players. and we expect the service will continue to drag on margins. However, we don't project any further large acquisitions and expect that most of the firm's investments will focus on smaller bolt-on acquisitions that have historically helped returns. So as we can see here, the management of Series XM is exemplary, ladies and gentlemen. They do buy back shares, and they do pay out a dividend. So this stock will eventually go up to $5 at some point, right? That is the fair value that analysts are given to Series XM, $5, which gives us an upside of about close to 100%, right? It's trading at $2.84 right now. If it goes up to $5, that's almost a 100% return, okay? That's almost double of what it's trading at right now. All right, ladies and gentlemen. So let's see what else we're going to talk about now. So as you can see here, ladies and gentlemen, I did subscribe to Robinhood Gold, all right? Because, see, I have Robinhood Gold. I am subscribed to Robinhood Gold. And why did I do that? Well, because I want to be able to give you more content, and I want to be able to give you better content. So if you want me to take a look at a stock for you, want me to talk about it and go over it for you, you could just let me know in the comments below, and I'll be able to take a look at the stock and see what the analysts are saying about that stock, right? Because I am subscribed to Robinhood Gold. So let me know. Now let's go into the news that came out on Bitfarms website. As we can see here, it says Bitfarms announced appointment of Fannie Phillip to board of directors. This news release constitutes a designated news release for the purposes of the company's prospectus supplement dated March 8, 2024. Well, let's take a look at what this says here. It says, today we announced that its board of directors has unanimously approved the appointment of Fannie Phillip to the company's board, effective immediately. With the appointment of Ms. Phillip, Bitfarms' board is now composed of 5 directors, 4 of whom are independent. Ms. Phillip is a recognized expert in the blockchain technology field and an accomplished finance executive with an extensive background in audit, public company reporting, and mergers and acquisitions. She is the founder of MTI Consales Incorporated, an accounting firm that provides outsourced accounting and CFO services. Formerly, she was the CFO and VP Finances of Canada Computational Unlimited Incorporated and the COO of Sato Technologies Corporation. As a former C-suite executive at a publicly traded company, she used to engage extensively in education and industry representation, advocating for regulatory changes and fostering a deeper understanding of the sector's complexities among stakeholders, especially on reporting and financial matters. She currently serves as Chief Financial Officer at Zoviago, where she oversees financial reporting and compliance and has been instrumental in various strategic acquisitions. Ms. Phillips holds a CPA public accounting permit and is a member of the mining committee of the Canadian Blockchain Consortium and the president of its Quebec chapter. So as we can see here, she has a great pedigree, this new board member for Bitfarms, right? Fannie's appointment to the board follows a comprehensive search to identify a highly qualified director that enhances the board's skill set and marks significant progress on our commitment to refresh the board with independent candidates, said Edie Hoffmeister, chair of the Bitfarms Governance and Nominating Committee. In addition to her outstanding audit background, Fannie's deep knowledge of the North American and European energy sectors and extensive experience across the field of digital assets, mining, and AI will be invaluable as we continue to drive significant organic growth and capture a greater share of the global demand for Bitcoin. We look forward to leveraging Fannie's experience to maximize value for Bitfarms shareholders. So as we can see here, ladies and gentlemen, her knowledge of energy sectors is going to be very valuable for this company, Bitfarms, because miners, right, they use a lot of energy when they mine Bitcoin. And so one of the things that they want to be able to do going forward is to lower the cost of their energy in order to be able to make keep more of the revenue that they get from mining Bitcoin. So very good news so far from Bitfarms. Let's take a look at what Ms. Phillips said. She said, Bitfarms has tremendous momentum underway, and I am excited to leverage my knowledge of capital markets and the digital asset industry to contribute to the company's continued success and help capitalize on the significant opportunities ahead, said Ms. Phillips. So as we can see here, ladies and gentlemen, this is wonderful news. As we know, ladies and gentlemen, the former CEO has left the house in shambles, right? But they do have a lot of capable people here running the ship in Bitfarms, and they just added one more capable member to the board of directors. Okay, so this is good news going forward, ladies and gentlemen. Even if Ms. Phillip is named the next CEO of Bitfarms, because as we know, they're operating without a CEO at the moment. They have an interim CEO and one of its co-founders, Nicholas Bonta. All right. But if Ms. Phillip is named the new CEO going forward, I do believe the stock will shoot up from what it's trading at right now. It could go between $3 and $4. Now, as I said in one of my previous videos, if Chief Mining Officer Ben Gagnon is named the new CEO, that will also send the stock flying all the way up to between $4 and $5, right? But having Miss Phillip as a CEO is also not a bad choice. And why do I say that? Well, we all know, ladies and gentlemen, that women, right, are able to fix problems in the household whenever a man leaves it in disarray. Okay. And I say that from experience. Okay. So yes, women do a good job when it comes to fixing things around the house. So I'm going to say this is not a bad choice for a board member that Bitfarms, made the decision on nominating this new board member. Okay. So this is all great news. And this is a response to what Riot Platform said about Bitfarms governance, right? They're adding new independent members to the board. And so as we can see, this is good news going forward. So next week, as I mentioned earlier, we are going to be looking to sell a covered call on my 100 shares of Blackberry. And we're also going to find out what the June operating report was for Bitfarms and see how the market takes that, right? If they're close to 12 exahash per second, the stock should go up starting next week. And as we all know, July has been historically a good month for the stock market. So all good things coming up next month. My buying power is at $0 right now. We're going to start the month fresh. So I'm going to start collecting my passive income here. The interest that I make on my investments are going to start adding up here. I am compounding my interest every week and every month, ladies and gentlemen. As you can see from what I'm currently at, I started off investing $300 a week, right? I started using the will strategy in February 27th of this year was the first option that I sold, okay? And from then to today, as we can see, my account has grown to $5,220, ladies and gentlemen. All of my money is tied up somewhere. I'm investing my money. I'm not holding it in my buying power. The only thing that I'm going to start holding in my buying power next month, July, is going to be the interest that I make on my investments, okay? So you're going to be able to see how I'm able to compound my interest every week, okay? But that's all for today, ladies and gentlemen. I will see you in the next video. And as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.